Are we live yet? Think so. Hey everyone. Welcome to another episode of the Bitcoin Brief. Haven't done one of these in a long time. And we are back with the one and only Jimmy Song. One of these days I'll get off Zoom and then Giacomo will be able to join us once again, though it's probably a little too late for him in Italy. Anyway, Jimmy, how you doing, man? How's the quarantine treating you? I'm not at my breaking point yet. But if that wall starts running out of room to put those numbers in, I think I have maybe 3 more weeks in me, and then it's over.
Yeah, I mean, quarantine's not so bad. I'm experimenting with cutting out dairy and eating more raw meat and things like that. I feel fantastic because I have a home gym and I can work out every day, so I feel great. But yeah, I mean, a lot of people are going stir crazy. I think there's going to be a full on revolution in the world if we're forced to do this another month or two.
Okay, so it's interesting that you mentioned how your diet has gotten better. So my diet has actually gotten, well, better and worse, right? So I have no crap food in my house. So I could only eat healthy food, but I'm trading all day long. And the only reason I have to get away from the computer is to go raid my fridge and cabinets. So while my food in my house is very healthy, the concept of intermittent fasting is out the window. I am like snacking throughout the day. So the quality of food certainly went up, but the intermittent fasting part of my diet is out the window right now.
Yeah, so your digestive system is probably working overtime because you're constantly feeding it, but at least it's with good stuff, I guess.
Yeah,
I
so
highly recommend lots of animal fat. By the way, I'm eating once a day and I feel fine.
well, no. I mean, most of the stuff I have is just fat. I do
Hmm.
alternate. It's usually like 2 days meat, 1 day fish. So I'm
Hmm.
still trying to keep fish and meat on separate days. And cutting out dairy is difficult because I love cheese. So but the only dairy that I do is cheese. Like I don't do any other dairy but cheese.
Yeah, same here. And but the thing is, I was overeating cheese, so like my body would kind of feel bloated after cheese. I cut it out, and I feel fantastic. I think my upper body is becoming more triangular. I have more energy for my workouts, and I've lost a little bit of weight, though I didn't weigh that much relative to my height to begin with.
Yeah, no, we got to do another one of these podcasts just strictly talking about food. But yeah, all right, let's get into the show. We got some live viewers, not as many as I usually get for the trading shows. Man, everyone just cares about the price. Jesus. Let's talk
Oh,
some news, Jimmy. Let's
yeah.
get back into the news situation. Are you ready for your government check? Are you going to get it, Jimmy?
I believe so. I filed my taxes not too long ago. I am due a refund. So based on that refund, I should also get stimulus checks on top, and my or my family should get one. So we'll see how that works. I'm planning to buy Bitcoin with it if possible.
Yeah, well, I'm a broke bum that everyone knows. Still drive my 12-year-old car now, so yeah, I better get one. But yeah, we'll see. We're all gonna find out. Well, I'll find out. I don't know if I'll be telling you guys, but yes. So here we go. So Cash App gave you a nice, very brief summary of what to do with your check and how you can get it directly into your Cash App, which will make it very, very convenient for you to buy your Bitcoin. I'm pretty sure most people that are listening to this channel that will get the stimulus check will most likely put it into Bitcoin. But I don't know if that's an interesting story. The more interesting story is what do you think about this whole thing? The government giving out $1,200 to everyone, putting everyone on crazy unemployment, giving out these weird loans to pay your employees while your business probably will not open anyway if it's too small of a business because of this crazy government shutdown. Give us your view. I mean, you can comment on the Cash App, though I'm not sure there's that much to comment on. But just give us your view of what the hell's going on in the economy and the money printing.
Yeah, the money printing is just absolutely insane, and I've tweeted a lot about the actions of the Federal Reserve and what they're doing. But some of the stuff that you're referring to, the small business loans, which have the ability to become convert into grants depending on what you're using the money for. I mean, it's just basically the government is giving out money like candy right now. And there's a reason why they need to be printing like $6 trillion. It's because that's the only way they can afford something like this. If they did it via taxes, then it would be very obvious that it's coming out of one pocket and being put into the other, with some taxes or with some grift thrown in there. But I mean, that's essentially what it is. You're paying for it. You're getting essentially a payday loan that you're going to have to pay back in inflation and taxes and price increases and things like that in the next 12 months. The reason why housing prices are so high as it is because a lot of the money printing has been going into the real estate market. And I mean, a generation ago, a house was much more affordable than it is now. So asset prices are going to continue to rise, and we're all just getting payday loans from the government. Essentially, it's sad that a lot of people look at this as a positive. They think it's free money. It's not free in any way, shape, or form. If you look at the M2 money supply since January 1st of this year, it's already increased 8.5% this year alone. Okay, that's in the first 3 months. It's increased 8.5% in M2 money. It's gone from 15.3 trillion to 16.7 trillion. It's absolutely insane. And in the week of March 23rd, it went, the M2 is the near money, right? But there's a St. Louis Fed graph where you can track the M2 money supply. They only have data up until the end of March.
Yeah, I was hoping they would. I was hoping they would link it here somewhere.
If you go back one, I think it's like the second or third Google search link. So
yeah, I know, but like I wanted the real time one. Let me see.
That's the one. Yeah, M2 money stock. But I mean, you could see like how much it's been increasing. On the week of March 23rd, it increased something like 2.3% just in that week. So that means that like if you annualize that ends up being like 400%. See that big spike at the end? If you change that to like starting from 2020, you're gonna have to press the forward thing. Okay, you could do it from January 1999 if you want. But
I wanted to see what it's like from in the last 20 years. So you can still see the spike, but I can zoom in. I can zoom in.
Yeah. So it would. I mean, you could see that pretty much every crisis. It like roughly doubles the amount of money. So 2001 we had 9/11, obviously. And it was around 4 trillion. 2008 it was around 8 trillion. Now it's around 16 trillion. So it keeps doubling. It's kind of nuts, but this is how much we're seeing. Yeah, you can see that it continues to be like the latest spike is just in pretty much like the last 2 weeks. It's and the Fed the Fed's authorized to print something like 6 trillion. I mean, actually they're authorized to print infinity, but the last few weeks that last 2 weeks of March have resulted in something like a 4 or 5% increase in the M2 money supply by itself. This is hyperinflation territory. Not to say that we're gonna get into that, but that's the cost of all of the stimulus that we're getting, all of the grants that small businesses are getting and everything. It's robbing Peter to pay Paul. It's you're not like. Redistributing money doesn't create any wealth. It's just taking from one and giving to the other. It's really being taken from all of us and then giving it right back while the government takes its cut. So it's a stupid system, but people think it's fine, and this is what they're clamoring for. So that's what they're getting.
All right, yeah, and we'll see how it all ends. For the time being, the stock market is pumping, and pumping, which is insane. How much the stock market has gone up since the lows. I think the stock market is going to pull back. I hope the economy opens up on May 1st. If it doesn't, oh boy, are the stocks going to reverse back to the downside? Because I don't think this money printing is not going to bring businesses back that are going to probably fail because of the shutdown.
Yeah,
By rate of
it is.
bot?
It is sort of pumping money into the stock market, though. That's generally where the money tends to go. Is whenever there's newly printed money, eventually it finds its way to the stock market. This is why when the Fed chairman says, hints at lowering rates, this is why the stock market goes up, because they're front running the money printing. They know that most of this money ends up coming into the stock market. This is why PE ratios in the S&P 500 are out of whack compared to when we were under a more sound money, like certainly before 1913, but even before Bretton Woods. So like this is reflective of the stock market is also reflective of the insane money printing that's happening. Everyone is front running all of this. All of this money that's being printed, most of it's actually going to corporations via commercial banks. So they end up in the stock market and went one way or the other, whether through stock buybacks or something else.
All right, so let's move on to our next story as to, some people may want to spend their government stimulus on buying an HTC crypto mining phone, which will recoup their investment in 500 years. So here's an option of what you can do with it. So HTC and their Exodus phone, not to be confused with Exodus, the cryptocurrency wallet, is for some God knows what reason, is putting Monero mining software onto the phone. Now, correct me if I'm wrong, Jimmy, but doesn't Monero hard fork like every 6 months, creating a bit of disruption in its mining process? Let's start there.
Yeah, absolutely. So I suspect that you're going to have to upgrade the Monero part if you want to keep mining. But like this article says, it's going to give you about 0.4 of a penny per day. So it'll take you about 500 years in order to make the money back. I don't really get why they're doing that. The fact that you could run a full Bitcoin node on the phone is kind of cool, and that was the main.
Can you run a full Bitcoin node on the phone?
Yeah, that's their big claim to fame, is that they have enough storage and bandwidth and everything else, and processing power in order to run a full node on a phone, and that's the big thing.
Right, but they will take you like won't it take you like I don't know, 3 weeks to a month to download the history of Bitcoin transactions?
Well, the download is actually not a big problem. All you have, I mean, it's 250 gigabytes, but that on a Wi-Fi connection, you can probably do that in at most a day. The harder part has traditionally been making sure having the space on the device for number one, and then number two, making sure that you validate all of it. And there are core software has done very well in optimizing a lot of that. So you can now run it on a phone, which is kind of cool. And that's the main appeal of this phone. I really don't understand putting Monero mining in, though. That just seems so stupid. But I mean, they can, and they did, and that's what they have now.
Yeah, no, running a full Bitcoin node on the phone, that does sound interesting. Though I will say I have downloaded the Bitcoin blockchain. Maybe my internet speeds weren't that great. It certainly didn't take me a day. It took me a little bit longer than that. But at least I'm able to download it in a reasonable amount of time. I always laugh when I watch people try to download the history of Ethereum. It's always hilarious.
Well, the thing about I've tried to sync an Ethereum node for as a part of a consulting thing, and what I found was that it'll sync fine for about a day, and then like 2 days in, it hits like some block number, and then it has trouble keeping up. And it always stays 100,000 blocks behind the lead for something like 3 weeks. So, I mean, it takes something like a month to really fully sync. And this was about a year ago. So who knows how it is now? Maybe they've made optimizations. Maybe it's worse. I don't know. But that's been my experience with it.
All right. So having this ridiculousness aside, let's move on to a very interesting story. So central banks recommended to ban stablecoins. So the Financial Stability Board provided a pretty lengthy document. This is the full document released today, April 14th. I didn't get a chance to read the whole document. I'm sure I would at 62 pages, but we're going to just review. This is why we have media, and they do a summary for us. So let's review this summary. This is actually very, very interesting. And I think this is going to be the bulk of our discussion today. So let's talk about, I'm just going to read over the key takeaways. The Financial Stability Board, FSB, outlined 10 recommendations to central banks for regulating stablecoins, including outright prohibition. The Financial Stability Board is an international entity that provides suggestions on the global financial system and comprises of central banks and finance ministers from major G20 economies. The recommendations are to be presented before the audience of the G20 countries and references major stablecoins, including USDT, which is Tether, USDC, which is
it's the one that Coinbase uses. Yeah.
Okay, Coinbase is one. Okay.
Yeah.
TUSD, which I believe is Binance, True USD, PAX, which is probably Paxos, which is probably what Circle uses, and DAI.
Paxos is by
we'll get to
ItBit.
DAI in a minute.
Yeah.
Oh, Paxos by ItBit. Sorry, my bad.
Yeah.
I always forget that they rebranded. Given the market's heavy reliance on stablecoins, a ban could mean disaster for Bitcoin. I'm not sure about that. And the broader cryptocurrency markets. And maybe that one I'm more likely. Okay. So that's the document. Let's go to this part. The FSB primary focus is on the potential risks that stablecoins could pose to the global financial stability. A little funny there, especially those targeted at retail investors. These fiat-pegged cryptocurrencies represent a risk to the financial stability of emerging markets and developing economies. Read the document. I think it should say reads the document. Okay. Moreover, the FSB argues that global stablecoins could pose significant governance challenges to central banks. Are they really scared of stablecoins? Jesus. The board seems especially concerned with the macro financial problems that could arise if over time citizens in both advanced and emerging markets economies begin favoring stablecoins over existing fiat currencies. The guidance is aimed at both advanced and emerging authorities, yada, yada, yada. Okay. Jurisdictions in emerging markets. Nope, let's skip that. According to the FSB, another potential issue is under distressed macroeconomic conditions, such as the current coronavirus pandemic. Global stablecoins could essentially become a sort of a hybrid retail repo market for US dollars. Isn't that a good thing? Okay. Anyway, if left unchecked, global stablecoins could have a destabilizing effect on capital flows and local fiat exchange rates, especially so in the emerging markets. Okay, so, oh wait, I'm sorry, I should have read this part. Jurisdictions in emerging market economies, meanwhile, express greater concerns about foreign currency linked stablecoins substituting national currencies, retail deposits, and safe assets. They're afraid that this could exacerbate bank runs and disintermediate the traditional financial institutions. All right, before we move on to the rest of this, which was also interesting, you want to give your thoughts first, or should I, Jimmy?
You can go first.
Okay, so let me go first on this one. So this is very interesting. It clearly shows that the Financial Stability Board, comprised of central banks, is scared of stable coins, which are backed by their own currency. Like, am I the only one that like sees this as borderline hilarious? So basically, we'll get to the decentralized stupidity of their document in a minute. But so they're scared of stable coins, which are backed by their own currency. So the thing that seems to bother them the most is that people in India would start to use USD Tether instead of the Indian currency. And somehow that is bad for the people because they want more stability in their currency. Well, maybe if the Indian government didn't print so much of their own currency and cancel their currency, making people run around from bank to bank, turning in $2 bills, people in those emerging markets wouldn't be looking for alternative currencies that are more stable. So if stable coins are better for the people and the people choose those currencies, clearly that's not bad for the market. That is good for the market. So this is clearly a huge panic statement by the FSB. Your thoughts, Jimmy?
Yeah, I mean, I think you've hit a lot of it right on the head. The main thing I got from the document was that essentially they're saying we should regulate all of these stable coins in the same way. I think the phrase that they used was something like same business, same risk, same rules. So essentially stable coins are in the same sort of business as a lot of like currency exchanges, for example. So they have the same risks, so they should have the same rules. And right now, those places are heavily regulated. And if you know anything about most of these third world countries, capital controls are a giant thing. And if you read between the lines on what all of this is saying is, they don't want capital controls to be skirted by using these stable coins. And that's essentially what is what they fear is happening is that legal tender laws in each country basically force everyone to use the local currency. So in China you use the renminbi, and if in India you use I forget what their currency is, but whatever it is, everyone is forced to use their local currency. But if they start using the dollar, then the central bank of that country starts losing power, and they want. So it's not really about the people at all. It's much more about making sure that each central bank keeps its locus of control over their own economy. And if they want to put it down the toilet by printing lots of money, I think what the FSB is saying is you should have the freedom to go do that without interference from the US dollar. Despite the fact that in any black market in any of these countries, US dollars are very prized for that reason. It's very stable. If you have a digital version, then they wouldn't. The big thing, though, is that they can regulate a lot of these stable coins for the very obvious reason that they're all centralized. Even DAI, which we'll talk about.
Right. That's the next topic. Let me lead into that right here. So
all right, sounds good.
So here's a little discussion of about all these links are in the video description, guys, by the way. And if you're going to look at the video description, hit that subscribe button. Trying to get to 100,000 viewers. Okay, so here we go. Recommendations on wait, not what I was looking for. Wait. Oh, where's that statement? I'm gonna do a search. There it is. There it is. The guidance is aimed at both advanced emerging economies. Here it is. Primary concern with stablecoins designed in a decentralized nature. So this tells me that the people that wrote this report do not understand how stablecoins work. There is no decentralization in stablecoins. It doesn't exist. A stablecoin functions by putting your money that your bank prints into some bank account, and then you have a digital form of that money. There is zero decentralization involved in that process. Now, there is some, I wouldn't say decentralization, but there is some unregulatory ways of moving that stable coin around. But there is a centralized mechanism that is keeping that coin stable. If you remove the if you remove and or regulate the underlying asset, which is your own money, then there is no decentralization behind this thing. So let me just read over some of the recommendations. Authorities should have the ability to mitigate risks associated with or prohibit the use of certain or specific stablecoins in their jurisdictions where these do not meet the applicable regulatory, supervisory, and oversight requirements. Authorities should apply regulatory requirements to, this is global stablecoins, arrangements on a functional basis and proportionate to their risks. This is really not the time for the government to talk about managing risks. Probably bad timing. Authorities should ensure that there is comprehensive regulation, supervision, and oversight of the global stablecoin arrangement across borders and sectors. Authorities should cooperate and coordinate, yada, yada. And finally, authorities should ensure that global stablecoin arrangements have in place a comprehensive governance framework with a clear allocation. Okay, so here we get to the decentralized part. And we're going to get to the DAI specifically. The FSB goes to explain the degree of decentralization in global stablecoin arrangements shouldn't really matter in terms of the demand for regulation, supervision, and oversight. So basically, they don't care that your currency is decentralized. I hope they know that it really isn't. Fully permissionless ledgers or simply mechanisms could pose particular challenge to accountability and governance and may not be suitable for regulation. It cannot be assured that appropriate regulatory, supervisory, and oversight requirements are satisfied. Authorities should ensure that stablecoin arrangements have in place robust systems for safeguarding, collecting, storing, and managing data. Basically, here's what that means. That means they want your data. They want the creators of the stable coins to send them the data on all transactions, which ironically is something they can actually enforce because none of these stable coins are centralized. We'll get to the DAI situation as our final subtopic of this topic. So look, I'm going to just say something real quick. Look, obviously, I don't agree with all of it, right? But, and here's the but coming. If Giacomo was here and maybe Jimmy, you guys will call me a statist. Look, I want Tether to be regulated to the point that there is government regulation, making sure that every Tether is backed by $1. Now, at the same time, I don't want those tethers to be tracked with KYC AML laws. Obviously, no one knows what the hell is going on the former, and we all know that I'm never going to get the latter. So what I want is not going to happen. But I do want regulation in stablecoins because I, as a consumer and the user of those stablecoins, want to make sure that the company creating the stablecoin is not scamming. Like, how do you make sure that it's not scamming? Like that. So there has to be some regulation there, making sure that the money is actually in the bank. Like, I don't care if it's government regulation or private regulation, but as long as there's regulation, making sure that these stable coins are actually doing what they're supposed to be doing. But at the same time, I obviously will not agree with the AML KYC laws, but the government is more interested in the AML KYC laws, and they really couldn't care less if these stable coins are actually stable. Jimmy, your thoughts?
Yeah, and that's what this whole memo is about. It's that they see it as sort of like a money transmission or foreign exchange business that these stable coins are engaging in. And their thing is it's the same business, has the same risks, so it should have the same rules. And same rules mean, well, you have AML KYC laws in these particular businesses, depending on the jurisdiction. Whatever those laws are, these stable coins should actually have the same things apply to them. And that's essentially the argument in that whole paper. And it comes up over and over again. The same rules should apply to these entities, and they can do it because these are centralized, like we've been saying, and they have the ability to do that. And even if the bank that Bitfinex uses for Tether or whatever is in some other jurisdiction, the government in India will probably end up having some regulation around Tether that says, hey, if you want to trade in Tether, or if you want to do business in India and you want to do something here, then you have to make sure you comply with our banking laws and make sure you show customer reserves, or have a certain amount in reserves that are provable and audited every so often or whatever. I personally think that the market should figure that stuff out, but the regulations are regulations, and the logic in the recommendation is absolutely sound. If you're in the same business, you should have the same rules. For a long time, stable coins have sort of been in this gray area where they're sort of regulated to some degree, at least as an on-ramp. For example, if you want to get like USDC coin or Paxos coin, that gets recorded when you buy some of it. But the intermediary steps are not regulated at all. And what the paper is arguing is the intermediary steps now need to be enforced, or in a very extreme case, if that's infeasible, then banned. That's essentially what it's saying. So do I agree with it? Absolutely not. But I can see the logic in what they're trying to do, which is to essentially enforce the same laws so that they can keep up the charade of capital controls and so on that each central bank wants, because they want monetary sovereignty over their own money.
And that's exactly where it's headed. And what you guys have to understand is, like, a lot of people hate us because we think Tether is a scam. A lot of people hate us because we keep saying that Tether is not a scam. Look, our opinion of Tether has always been the same. It will eventually be regulated because it can be regulated. And the New York District Attorney will tell us eventually whether Tether is or isn't backed, right? That's all it is. We've been warning about that it's impossible to create a decentralized stablecoin. And maybe one day someone will pull it off, but I just don't see how that is going to be possible. So let's talk about one of these stable coins that wasn't very stable, that claimed to be decentralized, that we know is not decentralized, and that is MakerDAI. And it's mentioned over here as well. Well, you know what? We'll save that for the next story. Let's talk about, let's play some hypothesis here. So let's say the hammer comes down and all of these stable coins clearly are being taken out and converted into, I guess, government or KYC'd, and they can't move them around. What does that do to the crypto market, you think, Jimmy?
The main ones that it affects, I think, are all of the altcoin exchanges, places like Binance and things like that, because there's no fiat on-ramp to most of them. Poloniex, Bittrex, I think a couple of them might have it now, but for a long time, they operated off of Tether as sort of like a fiat proxy. I think those get hurt the most because there's no way to get on there without like using something like Bitcoin. So, I mean, in a sense, it's probably bullish for Bitcoin because then Bitcoin becomes the one way to get into those exchanges. If those exchanges can't use those stable coins anymore, you no longer have the stable coin pairs. I think the market's fairly efficient, though. As long as you have Bitcoin as a rail, you don't have a single point of failure. So you can always use the liquidity of Bitcoin itself to arbitrage out any differences between exchanges and so on. But the main thing it hurts are, I think, those exchanges, and by extension, a lot of the minor altcoins that have like no volume except on those exchanges, right? So, the regulated ones like Coinbase or Paxos or something like that. Those exchanges are regulated, and they only list a small number of tokens, relatively speaking, to compared to, say, something like Binance. So I suspect the liquidity on a lot of these smaller altcoins will just completely dry up. At which point, I think they just kind of have very little volume, and then if it's illiquid, then people end up holding bags that they can't ever convert. So I suspect that'll happen, but I don't know. The other thing that it'll hurt are possibly a lot of the people in China that use Tether as a store of value. So they want dollars, but capital controls make it very difficult. So a lot of them hold Tether instead. Once that opportunity goes away, and say China starts cracking down on Tether as part of its central bank monetary policy, then where does that money go? I don't know, but I would guess at least some of it flows to Bitcoin, and and then maybe they can cash out in America once with a relative or something that has an account on Coinbase, something like that, as a way to hedge against their own currency being weak to the dollar or something like that. So those are the ones that I can think of, but I'm sure there's a lot more consequences than that as a result of getting rid of a lot of the stable coins. But I don't see this necessarily as like really bad for Bitcoin, like this article is trying to make it out to be, because I frankly, like once you take out Tether and stuff like that, well, the liquidity between exchanges now moves almost solely to Bitcoin.
Yeah, no, I think this would be very bullish for Bitcoin. Bitcoin would, first of all, start to become the unit of account and the stability mechanism for other shitcoins. Like Jimmy said, your illiquid shitcoins will probably die immediately. And because no one's going to care, because Bitcoin is still going to be pretty volatile, and it will be very difficult to trade a volatile Bitcoin against a volatile shitcoin. And but the biggest factor is this: there is a lot of Tether out there right now, a lot. So people are holding that Tether and other stable coins. If they get spooked that Tether is in jeopardy, they're gonna rush into to get rid of that Tether. And since you can't just call Tether the company and get US dollars, on a pile of $100 bills, you're gonna move that Tether into Bitcoin as soon as possible. And there's not that much liquidity in Bitcoin. So a Tether panic can literally spike Bitcoin to beyond $20,000 in a matter of days. That's what can happen if there is a Tether panic.
Yeah, and there will probably be some sort of arbitrage opportunity for the few people that have the opportunity that can redeem Tether for actual dollars. In which case, they can play that ARB game, and if there's like a 5% discount on Tether, then they can ARB that away. But yeah, I mean, like that's entirely possible that a lot of people convert to Bitcoin. In which case, I think it is bullish for Bitcoin. But yeah, it's like this article should be scaring the bejesus out of every centralized altcoin, and especially places like Binance, because they make just so much money off of the fact that they have all of these pairs relative to the dollar stable coins, essentially.
Yeah, by the way, guys, I've been saying, like, in my article, in my blog post in the beginning of the year, my top 5 things to look for the year 2020. I mentioned how the Bitcoin dominance should break 80% by end of this year. An outright government assault on stable coins will drive Bitcoin dominance to over 80% very, very quickly. Okay. So there you go. So this could still be sitting here at 65 going into November, and then one magic law passes and a crackdown comes, and there goes Bitcoin dominance to 80 or 90 literally within a week.
Could be. It would be hard to know.
All right.
It would have to happen first.
We got one more story, and this is a good lead-in right here. So we have, of all the niches in crypto, DeFi, Lord help us, which has undue reliance on stable coins, will be hit the hardest. MakerDAO may have its entire business model come under heavy regulation. Compound, not familiar with that one, could be eviscerated. And many of the other value add services, I don't know about this statement here, many of the other services that leverage stablecoins could lose hard-earned traction generated over the last year. 9 of the top 10 DeFi projects by value, anyway, it doesn't matter. So speaking of DeFi, here we go. Our decentralized stablecoin and lending mechanism is being sued for $28 million. Now, I actually chuckled when I was reading this. So first of all, they're suing for 28 million when the damages were actually only 8 million. Not damages, but they're suing for an additional 20 million in damages because, I don't know, they were looking at their computer screen or something. So that's completely insane. And obviously, and it's funny, so this lawsuit actually claims that this project is not decentralized at all. And I'm just finding this somewhat funny. Your thoughts, Jimmy?
Yeah, I mean, essentially what happened on quote unquote Black Thursday or March 12th was that a bunch of these contracts got liquidated for zero, right? And essentially they're complaining that this was completely misrepresented and so on. And there is a centralized party, a single point of failure that you can sue, and they are suing. And they're going to sue, probably win, because they literally got nothing for it. So that's a lot of money. We talked before on the show about how they're trying to make them whole by printing more MakerDAO to make up for it. And that's who knows if that's what's going to happen or whatever. But there's a class action lawsuit by all those people that essentially, because of the congestion on the Ethereum network, ended up having their Ethereum liquidated for $0. So they got nothing. So yeah, I mean, this is the sort of thing that you can expect. The one thing I wanted to mention about DAI, which is their stable coin, and that's what you receive when you get a loan in. When you put up Ethereum, you get a loan in DAI, and then they liquidate the Ethereum whenever it goes below a certain dollar price. The DAI is actually very similar in mechanism to a central bank, because what the MakerDAO Foundation has is a bunch of DAI that they have on exchanges, and DAI they try to keep exactly at $1. And what they do is, if it goes above $1, they sell some of their DAI that's on their exchange. If it goes below $1, they buy the DAI with the money that they have on the exchange. This is exactly how a central bank works. And you know, it's hilarious that they call this DeFi when there's literally like a central bank that's controlling the price of DAI. But that's how DAI works, and this is why it's open to being regulated in exactly the same way. From that last story, if you're going, you can regulate Tether because there's a bank account somewhere. You can regulate DAI because there's somebody that's trading things on exchanges to make sure that it's at $1. So you can go and regulate the exchange or regulate the actual account that's being used or whatever. So yeah, that's essentially what's happening here.
All right. So we have an audience question, and it's probably how we're going to close out, and it's a good one. So when the fiat currencies become, I'm rephrasing the question a little bit. So Jimmy, what do you think happens when the fiat currencies become 100% digital? And I think the dollar will be the hardest one to go fully digital because the emerging markets still demand paper dollars. But when eventually all of these fiat currencies go fully digital because they're scared of bank runs, there will never be a bank run again if there's no paper money, which is one of their main drivers. The other driver is, of course, tax revenue, because they hate cash. and they think everyone is a tax cheat. So when that world comes, what happens to Bitcoin? How do you acquire your Bitcoin, anonymously in a world of no paper dollars?
It's a great question. You probably have intermediary method of exchange, something like that. You can. So I mean, the obvious way to do it would be just to use Bitcoins as a unit of account. So whatever it is that you wish to buy, you sell your camera or your stereo or your golf clubs for Bitcoin, and that's how you acquire Bitcoin. Or you use your labor, right? Like you work for Bitcoin and do whatever it is. So in a sense, that would drive hyper Bitcoinization a lot more quickly, because if you can't acquire Bitcoin any other way, then you're going to use your goods and services, whatever goods and services you might have, in order to acquire it, which actually creates value and creates more of an ecosystem around Bitcoin that people will use. So I suspect that will happen. But yeah, I mean, there's always possibilities for intermediary mediums of exchange. So different ones pop up all the time, especially like in prison or whatever. I think they use cans of mackerel. But it could very well be something like that. You could even use gold coins if you want, and you can physically give a gold coin to somebody, and they give you an equivalent amount in Bitcoin, something like that. But humans are very creative, and that's the big thing. Whenever there isn't a way to do something, somebody comes up with a clever way of doing it, and that's how human ingenuity sort of overcomes obstacles. So I wouldn't bet on like that ending all possible ways in which you can transfer cash to Bitcoin. It'll just be more inconvenient, probably incentivize more people to sell their goods and services in Bitcoin, which in turn will lead to more Bitcoinization.
Yeah, and I'm with you on that, because a lot of people are scared of this, and I also talk about all the time how governments are going to eliminate cash. But remember, they're not going to eliminate it today. They're not going to eliminate it tomorrow. It's going to take at least a decade to do. And a decade from now, first of all, Bitcoin is going to have a huge market cap a decade from now. It needs to, otherwise it might as well die. So the market cap would be higher. Way more people are going to already have it. And the elimination of cash can certainly help create a circular economy within the Bitcoin sphere. So this is something that's good, not bad, because if it happened tomorrow, yeah, Bitcoin would probably have a tough time dealing with this, but it's not going to happen tomorrow. And by the time it happens, it'll come at a perfect time to just make Bitcoin thrive.
Yeah, and it'll be a very exciting thing to watch, because we'll be seeing sort of like the Bitcoinization of the world, like in real time. I mean, we're seeing it to some degree today, but it's small potatoes compared to what will be happening. I think that's maybe 5, 10, 15 years away. That will be something to watch, and we'll be seeing something historic.
All right. I think that is it for our show. I know everyone is waiting for me to talk about the price of assets. I will absolutely do it, but I'm going to do it in about an hour. We're going to end this show. I'm going to do another show in about probably somewhere between 30 minutes and an hour from now. So Jimmy, tell us where people can find you.
Well, just everyone, that there's a 9 coming on the 4-hour, right? Like that's coming up on the next candle. Just
wow, really?
I don't want to make them like resent me. It's like, oh, Jimmy's on the show, therefore, yeah, we know there's a 9 coming.
Wow, Jimmy knew it. I didn't even know there was going to be a 9 on the next 4-hour candle. Thank you, Jimmy. But yes,
so in about an hour,
we're going to go live.
Yeah, I mean, I thought Perfect. That's why you were saying we're going to do it in an hour. It's clear that there's that candle forming. Also, I think if you look on the daily, we're probably gonna get a green 2, although it's like a little bit, but it's not above a green 1. So we know. So I mean, this is the stuff that your fans are looking for. So yeah, we're probably gonna get a green 1,
Yep.
green
Oh,
1
yeah.
over a green 2 in the next day or so. So that's what everyone's looking for. I don't want to like make all of your viewers resent me. There's your technical analysis. All right. Anyway. My book, Programming Bitcoin, is available for developers. If you are interested in learning about Bitcoin and you are a programmer and you know Python, this is the book to get. The other book I have available is the Little Bitcoin book. It is available in English, Spanish, Portuguese, audio book, and Kindle. I think there's a fan translation of Chinese as well. We got several other ones that are in progress. Encourage you to read that book. A lot of people just anecdotally I'm hearing are asking about Bitcoin. If they are asking about Bitcoin, this is the book to get them started on what's going on. But yeah, those are my 2 books. You got anything you want to promote?
Well, just my affiliate codes. Jimmy, we got to get you a Bitcoin debit card. You can choose your design. We got to get you spending some Bitcoin when you leave quarantine. But look, I know you don't want to spend your Bitcoin, but man, are these things conversation starters. And these things are metal, thick as hell, and heavier than any other credit card on the market. Now, this is a debit card. You prepay with Bitcoin. By the time you get yours, you can actually keep it in Bitcoin on the debit card itself. So you're not liquidating it right away, only at the swipe. And it's an awesome conversation starter with any merchant you're actually using a Bitcoin with. So it's worth it. I think I finally gave Jimmy a reason to spend his Bitcoin at a store, like spend like $20 worth of Bitcoin in order to try and get the merchant to start accepting Bitcoin.
Well, I don't really care about that, right? Like I want them to use it as a store of value. I only want to use it if they're going to keep the Bitcoin and
I agree.
Convert it back to
this
fiat.
Is how it starts. This is how it starts. This is how it starts. They could
possibly
start accepting it because they might get interested. So please support with affiliate codes. We have the Financial Summit coming up in Bali, first week of November, Understanding Bitcoin in Malta, first week of October. And I will be putting up the options course on sale. I was going to do it today. I still might. It's just been busy all day. But I do want to put the option course, this current on-demand course, up for sale in 10 days, actually. I'm not going to give you guys much time to decide. So the last weekend of April, I want to take advantage of the quarantine where people are stuck at home. And that's it for us. We're going to, I'll be back in at most an hour. And we're going to talk about price like we usually do in the evenings. Jimmy, sign us out.
Fiat delenda est. This song is done.
Bye, guys.